Do you have $10,000 in cash just sitting there waiting to be used to generate consistent monthly cash flow? Forget starting a business, day trading, or chasing meme stocks. Here's what I'll do right now if I had $10,000 cash to invest based on my 20 plus years as a stock and option trader. I'm going to present this idea to you by means of giving you 5 tips. The first tip is how to find those stocks that can help you generate consistent monthly cash flow. You only want to pick companies that have proven over a long time frame that they are consistently profitable. These companies also need to be able to grow their earnings over time. They need to have proven that they can be successful during the bad times as well as the good times. In other words, stock selection is very important to this strategy. And for me, that means only trading in companies that are either fairly valued or even better, undervalued. The example trades and position I'm going to share with you in this video is Realty Income, ticker symbol O. But before we get to all the details of how I'm trading this one position in my smaller option trading account, let me share with you a couple other ideas besides individual stocks that you can consider. And I have them right here on the screen for you. This is actually a snapshot of a piece of my smaller option trading account. And notice here at the very bottom that I've sold put options in 2 ETFs, XLU and XLE. That's the energy and utility ETFs. See, even in a small account, you can use ETFs to be very diversified, even with a relatively small dollar figure. Here you see I've sold the September 19th 78 put in XLU. And at XLE, I've sold the September 19th $80 put option. So if everything were to go wrong, the world would have fall apart, then I have $80 times 100 shares worth or $8,000 at risk in this ETF. Now I've done something to change that $8,000 at risk into only $1,500. You see, what I did in the line above that is I bought the 65 put option with the same expiration day to cap my potential loss. And with XLU, I have even less money at risk. Notice that while I sold that $78 put, which would mean I have $7,800 at risk, I've greatly decreased that by buying the $65 put option. So I really only have $1,300 at risk in this put option spread. So that diversification, to me, it's important. You don't want to put all your eggs in one small little basket or one stock. If your account size is really small, then you might consider diversifying it by using ETFs. Now let's dig into a position that I would do if I had $10,000 I wanted to invest or to use to generate consistent monthly cash flow. And I'm going to do that by showing you the progression of some real trades I've been in Realty Income, ticker symbol O. In this video, I intentionally picked a trade in a position that I've been in for quite a while, as you see here in my smaller option trading account. So here's how this trade started, and here's how I would consider investing money if I had $10,000 I wanted to invest today to generate consistent monthly cash flow starting from day one, starting from today. So here's the trade I did to begin this position in Realty Income several months back. So we're going back here and you see the date was November 8th of last year. Now as I scroll down here, you see that I sold to open the Realty Income, ticker symbol O, January 17th, 55 put. I capped how much I could lose by buying that same expiration day, $40 put option. Well, how much cash flow did I generate for that trade? I generated 77 cents times the 100 shares worth that one put option contract represents. So I pocketed $77 minus commission. Not bad for a few minutes worth of work. But I want to make sure you understand what I've done here. Because before you trade any stock, before you trade any option, before you do any investing, you definitely want to completely understand the absolute worst that could happen if you do that investment. In other words, what did I have at risk? By selling that January 17th $55 put option, I gave someone the right to put or to sell Realty Income shares in my account at $55 per share anytime between the day I did this trade and the expiration day, which was January 17th. So basically, I had $5,500 at risk if Realty Income went to zero. Now I did buy myself some insurance and I paid someone else the right to sell it to them at $40 per share. So I really only had $1,500 at risk. But if I didn't have this $40 put option, I would indeed have $5,500 at risk by selling this put option. All right, so we understand what could potentially happen. Potentially someone could put or sell stock to me. They could sell me Realty Income at $55 per share. And since I sold one put option contract, they could sell 100 shares of Realty Income to me at that $55 per share strike price. Now let me show you what I did on a chart so you understand the risk and really the safety net that I had protecting me in this put option position. So I have my cursor here on the date that I did this trade. That's November 8th. Notice that Realty Income was trading for around $57 per share. Now remember, we sold the $55 put option. So that put option I sold was way down here, about $2 below where Realty Income was trading. So I gave myself a nice buffer there for Realty Income to come down and I still could win on the trade. So that was one reason why I sold that put option. It was below some previous support. Another reason is that if I had to buy Realty Income at $55 per share, well, I felt comfortable with that valuation. You see, at that price, I think Realty Income is undervalued. So I feel like I'm buying a great company with a long track record of being profitable and actually increasing their profit, and I'd be forced to buy it at a discount. So I was happy with this trade. So just keep in mind what would happen if Realty stayed above that $55 strike price. If that happened, I get to keep that $77 and nothing else happens. That option expires worthless and I can do it again in Realty Income, or I could pick some other stock to do it in. On the other hand, if Realty Income were to come down and be below that $55 strike price at expiration, say it comes down here to around $53 or $52 per share, then at that point, if I didn't do something with that put option I sold, then I would be assigned 100 shares of Realty Income and I have to pay $55 per share. Now, some put option traders, they base what strike price they sell those put options at based solely on delta. They say, I want to sell it at a 20 delta or a 30 delta. And delta tells you a couple things. One thing it tells you initially, and at that moment in time, is what the likelihood is that that put option will end up in the money at expiration. Or in other words, if you didn't do anything with the option, what are the odds that that stock might be assigned to you if you sold a put option? Let's take, for example, the options here that are expiring in about 40 days from today. We're going to look at the $55 put options. Notice that delta of that put option is about 0.21. That means it's about a 21% chance based on what the stock is doing right now that this $55 strike price put option will be in the money, and therefore if you didn't do anything, 100 shares per contract will be assigned to you at $55 per share. Now, whereas delta seems like the easy way to pick your strike prices, I think it's a bad way to pick your strike prices. Here's how I pick them. All right, let's go back to our chart here. Let's pick a strike price that I feel comfortable selling put options at today. So we see on Friday that Realty Income closed at $57.60. So what strike price would I feel comfortable selling a put option if I wanted to collect some cash today? Well, first of all, I'm seeing this been finding nice support around this $55.88 per share area. Notice I found support all in here. But if that broke through, then it found support back in here around that $54.35 per share area. So I might be willing to sell one just below that area. Now, if I want to be really safe, I might take the low from back in here, which is around $50.55 per share, and sell a put option there. Personally, I believe that Realty Income is already undervalued, and anything below here is kind of like just icing on the cake. I'm buying it even cheaper than an undervalued valuation. So I'd be comfortable selling it anywhere in here, but what I want to do is sell it below or at worst at support. So ideally, I like to sell it right around here, around $54.50 per share. That gives me support right in here to protect me in case the stock were to go down a little bit, and then it gives me another level of support right at the money or right at my strike price. So let's see how close we can get to $54.35 per share. All right, so we're back on our option chains here, Realty Income. We're looking at the ones that expire in about 40 days. So we have the $55 strike price put option, and notice it's selling for around 35 cents to 40 cents per share. Now that's not that great of a return. My broker's estimating it's about a 5.5% return. But remember, I want to be below that. So I'd actually have to sell one below that if I wanted to be careful and have two levels of potential support between where the stock was trading at and the strike price of the put option I sold. So if I want to do that, since there is no $54 put option, I have to sell the $52.50 put option. Those are selling for around 10 cents per share to 20 cents per share, so just not much return there. So in this situation, I might go farther out in time. Maybe I go out 159 days. Let's say I was really stuck on, I didn't really want to have to deal with Realty Income unless it came way down and was at a really good price for me. So I wanted to sell around that $52.50 strike price put option. So I might go out to January 16th, which is about 159 days into the future. And notice what that put option is selling for. It's selling for about $105 per share. That return's a little bit better. It's about 4%. So not some great return, but some nice, decent premium. We'll be buying Realty Income at what I consider a very good valuation. At this point, very undervalued based on the fundamentals right now. Now keep in mind, things can change from second to second and day to day. But based on what I know about Realty Income right now, I think that's an awesome valuation. So that's how I pick the strike prices of the put options I sell. It's not based on delta, it's based on support. And here's what that looked like on the chart. Remember, we did this trade on November 8th, which was trading for around that $57 per share. Fast forward to January 10th, when that put option was assigned to us, and Realty Income was trading for around $52 per share, so it come way down in price. So as a result of that put option being assigned, we bought 100 shares of Realty Income at $55 per share. So that put option was gone. That person cashed in their insurance. I got to keep that $77 in premium that I received when I sold that put option, but now I bought 100 shares of Realty Income at $55 per share. Now we're going to move on to the next step, which is turn it into a covered call. That's exactly what I did, as you see here on January 13th. I sold to open the March 21st $55 call option, thus turning the shares plus the short call option into a covered call, and I collected 60 more cents per share. The other cool thing that happened is I was lined up to begin receiving Realty Income's monthly dividend. As you're going to see here in just a minute, that can really add up to some nice cash in your pocket every single month. So we got $77 whenever we sold that put option. We got another $60 minus commission whenever we turned it into a covered call. Now, what strike price should you sell your covered calls at? Well, one easy way, if the stock's still trading for around the price you bought it at, is just to sell covered calls at the strike price that you bought the stock at. Just keep in mind that that covered call strike price you're selling, you want to make sure you're comfortable selling the stock at that price. Since I was assigned the shares at $55 per share, I was comfortable selling them at $55 per share. But as you're going to see in just a minute, I didn't leave it at $55 per share. And it's important that we talk through why I did that. I think it'll really help you be more profitable in your stock and option trades. Now, another bonus for Realty Income that you want to keep in mind is that monthly dividend, because it can really add up over time, as you're going to see in just a minute. Here you see that as of today, Realty Income's monthly dividend is right at 27 cents per share, or for the 100 shares I own, about $27. And I don't got to do anything for that. That's in addition to my covered call premium. In just a minute, I'm going to show you all the cash flow I've received in this position, including dividends and cash care put options and covered calls. But first, let me give you a snapshot of how this went down. Here you see on January 11th, we were assigned these shares at $55 per share. We then turned it into a covered call on the 13th by selling the March 21st $55 covered call and got 60 more cents per share. And then notice what I did a couple months later on March the 18th. That March 21st covered call option at the $55 strike price was about to be called away from me, or that call option was about to be assigned. And I still wanted to stay in this position. I love the monthly dividends. I love the company. I still think it's undervalued, so I wanted to stick with this position. I also wanted to potentially benefit from stock price appreciation in case Realty Income kept going up. So as you see here, on March the 18th, I bought to close that $55 March cover call and sold to open the June $57.50 cover call. And we didn't get much. We got 2 pennies, but we did get a credit. We rolled that strike price up by $2.50 per share. And here's why I did that. If I didn't buy that cover call back, it will be assigned or my shares will be called away because Realty Income was trading for around $56.50 per share. And I thought it was a good chance that Realty Income would keep going up in price over the long term. You see, it had been this nice uptrend. It was making higher lows and also higher highs, as you see right in here. But the main reason I did is because I really liked the company. I felt very comfortable with it, and I like trading in a company that not only pays monthly dividends, but is undervalued in my opinion. So I rolled that cover call strike price up from $55 per share all the way to $57.50 per share. Now I get the benefit of the extra $2.50 per share in stock price appreciation if Realty Income stayed above that price, and eventually the stock was called away from me at $57.50. So here's a recap of all the cash I've collected in Realty Income from the time I started selling that put option at the end of last year to present day. For selling those initial put options, I got $77 put into my pocket. For selling and rolling cover calls, remember, we've rolled the strike price up. We've actually rolled it up again, as you're going to see in just a minute, but I've pocketed another $159. Now, as far as the dividends, we've already collected a lot of dividends in this monthly dividend paying stock. And since I own the stock on its ex-dividend date at the end of last month, I also get paid another dividend in August. So in all, up to this point, we'll have pocketed $188 total in dividends and Realty Income. And here you see my up-to-date actual position in Realty Income. I still own those 100 shares. Remember, I paid right at $55 per share, but I figured in that 77 cent that I got up front, so say my cost basis is $54.18 per share. And I actually rolled my cover call strike price up from that $57.50 cover call. Now it's up to the $60 cover call, and it's the September 19th expiration. So that expires in a little more than a month from today. If Realty Income is called away from me at $60 per share, since I only pay $55 per share, in addition to all those dividends and all that put and cover call premium I've collected, I'll make $5 per share or $500 more on stock price appreciation. So that's why I wanted to point this line out to you, is that we might potentially benefit by another $5 per share or $500 in profit in this position if it's called away from us at my now cover call strike price of $60. So I've run the return for you here based on a more conservative estimate. Let's say instead of me selling it at $60 per share, I sell it at $57.50 per share. What is my annualized return on this position? Well, since I will have pocketed $674 in profit between dividends, cash and put options, and cover call premium, I will have been in the position for 9 months. When you analyze that by multiplying by 12 months and divide it by my investment, which is $5,500, I will have received a 16.3% annualized return on Realty Income. Now, if we go with the strike price I'm currently short, which is the $60 per share strike price, then I would have a realized profit of $924. And if you annualize that return, it'll be over a 22% annualized return on this boring, stable, in my opinion, undervalued dividend company. That is what I would do if I had $10,000 today and was willing to risk it in Realty Income. As you saw, I actually have this exact position on in my small account. Before you jump headfirst into this business strategy, which I've loved, I've been doing for over 20 years, here are 2 reminders I want you to make sure that you think about. First one is, if you've never done these trades before, this is a version of the wheel strategy, and I have a whole playlist of videos dedicated to the wheel strategy. But before you place any trade, like what I'm showing here, why don't you consider paper trading or trade in a simulated account for several rounds? I prefer you to continue doing that until the position goes against you, so you can see how you'd respond and how the position responds to a bad move in stock price. And the other thing is, once you decide to go live, go small. and get yourself some protection like you saw I did with my XLU and XLE positions. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. A YouTube viewer asked me what I thought was a really good question. They asked, how do you select the stocks that you're going to trade in? Well, as I mentioned, that's the basis of this whole business. So I think it's a very good question and one you want to have the answer to. If you'd like to see how I pick stocks that I trade options in or stocks that I buy outright, check out the video at the link above and the description below entitled The Perfect Option Wheel Stocks, How to Find Them. Until next time, happy investing, and we'll see you again soon.